I'm back. You can't get rid of me that easy, 'cause I'm a lifer in lar. I know you get tired of hearing my out-of-tune guitar, but we're gonna talk to veteran. He taught me that snaga means strength, so because I clicked the wrong window, we'll have to shorten the length of his interview. Thank you, everybody. And I saw that, Jax. I saw that. You said that was my best, my best interview ever. You hurt my feelings, man. Man, you hurt my feelings. Please refresh your page. Hi, Zabi. How are you? Please refresh, guys. If you didn't hear my song, who heard my song? Maybe I need to refresh. Did you like it? So Euro's threatening here a little bit. Hi, Zabi. Welcome back. I also see another new handle, FX Kid. Let's welcome FX Kid. And we're going to be speaking to veteran here in a minute. I just closed the wrong window. How about a LAR welcome for FX Kid? How old are you, kid? FX Kid, what's your age? Waiting for veteran. Hi, John 573. Nate. Nate's a new handle. Everyone welcome Nate. Welcome, Nate. How about welcoming some of our new handles in our community? Refresh, please. I'm back. Some people have heard me. Aliens heard me. Kev has heard me. Fame has heard me. There's veteran. Okay, I know. Some people are hearing me. Okay, I won't. Hi, veteran. So we're getting ready for veterans interview. And then Ashraf Laidi is going to be with us at 15 after the hour. A lot of new handles in here today. Borgia, Nate, and FX Kid, and Albert, I believe, is new. Tim's back. Hello's back. Hi, Ricardo. Hello, Abel. Paul Volker's back. Everything's good now. Okay. So veteran's been with us for about a month now. I believe when he first came here, he was trading a demo, and I'm not sure if he stepped up from micros to minis or what he's doing, but he has a desire to talk to us. So not that many people want an audience. Besides death, public speaking is one of people's greatest fears. Never was a fear of mine because I have ADD. I have attention deficit disorder, so I can never get enough attention. So public speaking was a great way for me to get attention. Singing karaoke was another great way of me getting attention. That's how I met my wife. I met my wife singing Purple Rain by Prince. So that's how I marketed myself. And lately, with all the East Coast flooding that we have going on here, a lot of rain, deluge from Joaquin. Just to show you guys that although I trade and I love the markets, trading is what we do. It's not who we are. So check this link out. Show you another side of me. Okay, Vedran, the link is being sent to you now. Looking forward to talking to you. Yeah. How about a cold marriage? A cold marriage and warm beer. Because there could be warm marriages. Don't you have one? Stand by for Vedran. Alien's still alive on his pound trade here from his 275 entry, I believe. I don't think it got up to 320, so I think he's still alive. Euro could be rolling over here with the strength in the market. Looking forward to talking to Vedran. He taught me that the Croatian word for strength, which is what we all need, mental strength, physical strength, because trading's like being in a battle and you have to be a warrior, physically and mentally strong to do this. Take care of yourself, get good rest so that you're patient and you're making good decisions. In what, Jose? An upside breakout? In what? Euro's starting to soften up here. So we're still waiting for Vedran. Euro pound still heavy. We never got the third drive in Euro pound. I thought we might get it. So this is a pretty negative day again in Euro pound. I think we're headed to 71 in Euro pound. So we're already about 90 pips off the high. Pretty glaring divergence here on the daily up here. Okay. Pretty good divergence here on the 4-hour. So euro pound looks negative to me. That makes the euro the preferred short. Thank you, Jose. So the euro pound tells me that the euro is your preferred short, pound's your preferred long. Because the big picture on here, I've started talking about it last week. We had a little interruption in it. Let me see. Thank you, Jose. So a symmetrical triangle. So you have a symmetrical triangle. Okay. I think we have veteran here. Hi, veteran.
Hello, Sir Dale. Did we go live?
How are you?
Have some technical problem. Please wait a second.
I can hear you fine. It's a little dark in your room, though.
Yes, because two big screens are watching and analyzing some gold and oil, Euro USD, GAPI, and so etc.
Okay, so is it because Putin's cutting energy supplies to Croatia too?
Yes, but when we talked yesterday, we mentioned some changes in the oil. For now, my price in oil is around 50,
Yeah.
and this is 100% of the retracement of the fall before 2 months, actually.
Okay, you know there's a better way to share your screen. You just go up to the green box. Did you try it? On the upper left-hand corner, you'll see screen share. It's
Yes,
a green box with an arrow. See that?
Okay.
The green box
Yes.
with an arrow? Click that. Beautiful.
Okay,
beautiful. So we don't see you, but we can see your charts better. So,
yeah, this is gold, USD.
Okay, so before we get to the markets and your ideas,
yes,
I'm curious because it is somewhat unusual that people want to be interviewed and share with the community, what they're doing and their journey. So why don't you start off with telling us how long you've been doing this, and I know your training academically is in economics. So tell us about your journey and what motivated you to get involved in trading and what led you to Forex.
Actually, thank you for the question, Sir Dale. It's a great honor to have an interview with you because you are working on the CNBC, the biggest US television about the finance. And how I started, that was before 15 years. On Croatian market, I was buying and selling some stocks.
Okay.
And this is not, how I explain, too good for me. I was finding something faster. And after that, I go to the university in Osijek and start working for different companies from Europe, United States, Croatia, Croatian television, radio, and my domestic radio, Croatian radio Županja here is in Croatia, and must go to finish my university, and that was a stop in trading stocks, forex, and other stuff. After I finished that, I just want to come back on the market, but it's too hard to back on the market on the live accounts, and I was starting with some demo accounts to practice, to remind how I was trading, training, psychologically training, technical trading, and I find you. And you suggest me that if I have a time, that I have a great analysis, technical and fundamental, that I go on the micro account, and now I'm working on a micro account.
Okay. All right, and why don't you tell us, kind of be a little bit of a LAR commercial. What benefit are you getting out of finding this community?
The first is when I find I was listening for you. You have experience. You are the member of the Chicago markets, and you are trading about 30 years. And this experience for me is priceless because I
And that,
have.
okay, so that was your preconceived notion. And I bet what you found out when you came in that, you
On,
came thinking I was going to be a major piece of guidance for you. And I
yes,
believe what you found is much more depth through our community of different traders using different methods and sharing
yes.
their ideas because I know it gives me an edge. And is that what you discovered? Is that there's strength in numbers and not one person knows everything?
Yes, but like yesterday, you say to me, it's better four eyes than two, and I agree with it. And I like to hear any opinion, any fundamental analysis, any technical analysis, and I make some middle price for action and go in the market on my analysis. But
Can I ask you how old you are, veteran?
I have 37.
Okay, so your childhood must have been very tumultuous with what was happening in the Balkans.
What's happening on the Balkans?
In the
Now we have,
Balkans, during the war, the Croatia, there were,
yeah,
NATO had to step in.
yes,
So,
yes.
so
This was,
were you affected in your early years by what was happening around you
yeah,
geopolitically?
yes. I was at this when the war started. I have 10 or 11 years and
Wow.
finished my gymnasium and the work conditions, and this was 1996. After that, I go to the university in Osijek. And from 1996, we have ended our Croatian war for the independent.
Right.
And actually, tomorrow is Independent Day in Croatia. It's actually it's a holiday. In
Okay.
this,
Well, you definitely must have Snaga because most of us that are in the community today have not experienced war on our own soil. We watch it on television, we read about it, but you had firsthand experience. How did that shape your worldview, and what impact did that have on your life moving forward when you knew that things weren't always going to be you lived through a crisis, a major crisis that most
yeah.
people do not have to. I'm curious about that.
First of all, when you have teenage years in the war, you must starting life again. I found myself in the University of Economics in Osijek, and when I was starting study, I was before that have one small rock band, and we are playing and trying to living some on some way that this war is not happen to us. But the life is life. You never know what is happening, what will be
Right.
tomorrow,
Yes.
and that's
So
usual.
did it give you a sense of today is all you have and make the most out of today? And you talk about starting to live again or starting life over um, in the markets. People that blow
Yeah.
up accounts have to learn to
Yes.
start their trading life over. And, I have a saying, you don't lose till you quit. I've blown up accounts, but I'm still in the game. So you reassess, you regroup, you rearm with ammunition, and you learn from your mistakes. And that early childhood thing must give you resiliency, so that when you're wrong on a trade, that's nothing compared to dodging bullets.
Yes, yes, you have actually right. This is a psychological part of the trading and the forex market.
Mhm.
Actually, this is the part of some fundamental analysis. If
Mhm.
you have a bad fundamental and you are not very stable on the psychological level, you will have all time bad trades, and this is not good only for real accounts. This is very bad on the demo. Is something to trying, studying, and other stuff. First of all,
Okay.
is the social environment that must we understand and be exactly psychological stable person, because you must decide on if you have a great technical analysis, you must decide to go in trade and for how much.
Right. So I've been watching your charts now for several weeks, and why don't we take it now to this segment being about what your views are on a few markets? And I hope you don't mind me delving into your past, but I think it holds value for people that take for granted that we're living in peace, which is now looking more fragile in the world, and that we could even leave a door open and there's food on the shelves at the grocery store. And a lot of us take these simple necessities for granted, that in certain situations, those basic things that we take for granted become luxuries.
Yep.
Okay, so enough history. You're only as good as your last call. Take it away, buddy. So we're looking at gold.
We are looking at the gold. I'm looking gold from a Croatian perspective. This is that Croatia is the part of the European Union and is a proud member of NATO. So, if we have some geopolitical understanding what is happening on the Middle East and who is buying and who is selling the gold behind the lines, this is actually not what I seeing on the market at the moment. Now we have 1,145, the price of gold, but I think that 150 to 156, maybe in this area around the Fibonacci retracement of the 61.8, that will be the top for the month. Actually, this triangle is broken. I showing the people yesterday and on Monday this graph, and this is now broken triangle. Its price is going up, but I very closely watching what is happening in Syria. This is the biggest question for now, because Russian army have a big influence on this territory, and if Russians go on the field with tanks and other stuff with humans, I think the price of gold and oil, but I will explain oil just a little bit later, will fell down because of this area. This is the most great countries, very rich countries who have oil and a lot of gold. So if they have no money and this country is in the war, like Croatia is before 15 years, we will sell a lot of gold, and the gold price is will in at that moment going down because a lot of people, a lot of countries
So
will sell
you think
gold.
the oil producers, like Russia, that they, because they're in a cash crunch, they're going to liquidate some of their gold stockpiles?
Uh, about oil, I have no chart on this on
Okay,
this.
well, who are the buyers in the gold and who are the sellers in your view?
The buyers of gold for now is no one, and
Okay.
the sellers settlement will be very high. But like I said before a few minutes, it's very possible that Russian military go with tanks on the battlefield,
Hmm.
and in this case, I think the selling of gold will be very very high. If you look at the China market, the China is
Yeah.
have
Okay,
a
so you think
very,
Russia, because they need money to finance these
yes,
military
but
operations, will sell gold?
yes, and
Okay, and
also
you think China, because of the financial mess in their markets, and they've been the hugest buyers over the last 5 years, you think they're going to sell gold?
yes, because of the money market is very hard to explain. If China will support the Russia, they money supply are on monthly basis, maybe 2 months that they have handle on the money, but they will selling gold to finance this war, and they're expecting that the price of gold actually in next, I don't know, 1 month will be go down, especially if we see on this area United States who will hiking the rates, and this is also a very big question. We actually don't thinking about hiking rates in the United States, because this will happen. In my opinion, that will be in the February. And what will happen now? Actually, we decide to go on the other side, because if Fed hike rates, uh, nobody is asking for how much, but we are asking for how much. This will be very destabilizing for the bond market. And when you get a gold in this market, this will be very hard to understand where the price will be. So on the gold, I will choose to trading on a fundamental level, because
Okay.
if United States and Fed hike uh, around 4%, this is my opinion, and this is very high. The bond markets will explode. Actually, will be crashed. But I'm speaking of the states bond.
Okay. You're the treasury bonds.
Treasury bonds, yes.
Yeah.
And this war in Syria, I think that some state will be erased from the maps.
You know what? I always had an interest in prophecy. And
Yes.
I've always had one eye on Syria because there is a prophecy that Damascus will be turned into ashes. And just keep an eye on it. It's always kind of stuck in my head. And anytime there was something happening in Syria, it is the oldest city on earth. Okay,
Yeah.
the oldest city. I mean, it goes back to the Persian and Babylonian empires. It's been around that long. So I find it a little bit surreal what's happening there,
Yeah,
knowing
yeah,
that was.
it's a real. It's a real. So this Fibonacci levels, this is the highest price, and this is for now lowest priced, but expecting still big volatility, and expecting actually this is Heiken Ashi,
Hmm.
and will trade fundamental 60-70% fundamental, 30 to 40% technical.
Okay,
And
so what are your downside targets if what you say happens and some of the bigger accumulators of gold sell? Where could that take gold down to?
under 1000 in
Okay, the previous lows were 1070. You looking for new lows?
Yes, and if war stop and Fed is hiking the rates, expecting actually in the fifth or sixth month, 2016, below 950.
Okay, thank you very much for your outlook on gold. Any other market you want to cover during this call?
Well, you asking, I am answering, and if you are interested in maybe pound Japanese yen.
Okay, let's see the yen.
Yeah, we see tomorrow, excuse me,
Oh, okay,
yesterday,
the guppy,
I,
yeah,
uh, I showed the post where when we was around here and
yeah,
targeting 184.30 somewhere on this area. Actually, this
yeah,
is the sorry.
yeah, and it got back to 83.90 or so, didn't it?
Yeah,
Yeah,
I think the pound is very weak because something is happening in the United Kingdom. The Prime Minister talking about the war in Syria, and I don't know what is happening, but I think the pound is very weak. We have some depreciation of the Japanese yen, and this economy in Japan is working, and pound is still on the same level from I don't know how about to say, but 1 or 2 months it's actually is nothing happening. If we look on the
to me, it looks like it's starting to develop a, descending triangle where you have a straight line against that low and the low back in September, and
yes,
you start getting some declining highs, lower highs, and this is just corrective, and that's a pretty big formation. I think you're
yes.
talking about almost 1,000 pips, so back under that 181 level next time could take us to 170.
Yes, but it's not usual for pound. This is actually where the pair who is extremely heavy and extremely dangerous to trade because it's jumping around 100 pips in 5 to 10 minutes. But something is going on. I don't believe actually that the pound is so weak because I was in London before 2 or 3 months and speaking with just commercials and other stuff, and actually they living very well. And about the tomorrow is hiking rates in the United Kingdom. Actually voting for that hike or no hike. I think that tomorrow we will have no hike. The United Kingdom will wait for Fed or in United States. The Fed decide to hike rates. After that, United Kingdom will do. So we have this level at 184, maybe 184.30, and this is a level what closely look to sell actually the pound and buy the Japanese yen,
Mm-hmm.
and and export is a very big stuff in the United Kingdom. If we sell it on this area, I think the pound maybe go to the 175, maybe below. This depreciation of the pound and the England will help the economy for exports. And
Okay.
that's my real opinion, what I'm looking. Because
Well,
we have now last 2 3 days, I don't see the pound. It's so weak, but markets it's showing that pound is weak. But I don't believe in that. I think the pound will have just a little bit go down and around this area 175 and 200 after that, because the
okay.
exports in United Kingdom on depreciation of the British pound will high value it.
Okay, so that's a Nostra veteran call down to 175 and then back up to 200. We have another interview, buddy, coming up in about 7 minutes. So
Okay.
I'd like to wrap it up with you're a great addition to our community. We appreciate you sharing your work every day with us and teaching me a key word, snaga, because we all
Yes.
need it as traders, and sharing your life story with us in your early years, having lived through a real battlefield. This is only a financial battlefield. So really glad to know you, veteran. And how about everyone giving veteran some encouragement for coming on the air to talk about his life and a few ideas that he's sharing with us going forward. So thank you, my trading warrior brother, for sharing your stuff and speaking to our whole community today.
It's a great honor to have an interview with you, Sir Dale. And I want to say hello to Sir Mauricio.
Okay, we Mauricio and I thank you, and may pips rain down on you from this day forward, my friend.
Yes. Have a
Thank
good
you.
trading to all. Thank you.
Thank you, veteran. How about a round of applause for veteran? How about showing some appreciation for one of our community members? There you go. Thank you, Mauricio. One more round. One more round. Okay. He's the man. You're the man today, veteran. You're the man. So here's your man award. We have Ashraf Laidi coming in here in about, Ashraf will be here in 5 minutes. Stand by for Ashraf. He's a top in the FX industry. In the meantime, here's your award, veteran. You're the man. Use less leverage. Congratulations, veteran. Okay, thank you, Mauricio. So Euro's trying to hold here. Pound's starting to look a little weaker. CAD's going to recover. Guppy getting close. Everyone doing okay? Give me a Y if you're doing okay. S&P's up 16. Everyone doing all right? How's everyone doing today? Give me a Y if you're doing okay. Any comments from new handles on what we do in here? Your impressions of what we do in here? $11.34. Ali wants to be a buyer in gold. So what's that, about 15.20 lower? I see that. Okay, I see that. So we've had some great looks today from people. Those of you that are hearing me, seeing me, my name's Dale Pinkert. I'm the anchor here in FX Street's live analysis room. I invite everyone to come in and share their ideas with us. We do have a great mastermind community. We share work with each other. Ashraf Laidi is going to be with us in just a few minutes, so stand by for Ashraf. A very well-known trader, technician in the FX arena. So just to give you guys an idea of what we do in here, we show charts. There was a chart shown earlier by Jose, a triangle and the euro on the daily. People share their looks with us and we communicate through charts here. I feel it's an edge to be in a community of people willing to share their work that did not come easy. Hi everyone, I'm Dale Pinkert. I just want to show you what we do in here. So we show screenshots. There was a look at a triple top in the crude. And we share our views through the use of charts. Not sure if you're seeing me. Let's see. Okay, I got this. So you can see my charts. Gold on the verge of this correction. We did diverge up here at the last high at 70, veterans negative on the gold market. So we're about a minute or so away from speaking with Ashraf Laidi. I've interviewed Ashraf, I think, once or twice before. So looking forward to this interview. How many in here have followed Ashraf? Follow him on Twitter. Okay, congratulations, Rick. Stand by for our special guest and drop into our community and show us your artwork. Show us your technical artwork like Ricardo Picasso does and Alienovich does and Jax R. Wild does. Many in our community sharing their technical work. You could come into LAR and have no ideas and within a couple hours have many things to consider in the markets that may suit your trading style. Or you could look for confirmations with what you're thinking with other people who use different methods coming to the same conclusion. I really enjoy when that happens. To me, it's confluence when people that use different techniques point towards a similar price area and scenario. So we have a mastermind here in LAR and it's free. And FX Pro is our sponsor. So here's an example before Ashraf gets here. Here's an example of Ricardo's work. So he was talking about this wedge for a while and looking for it to finally break down, head down towards this 237 level. Okay, nice look, Ricardo. Everyone thank Ricardo for his view on pound Aussie, I believe. Thank you, Rick. So we thank people for sharing the magic words. Thank you. And you're welcome. And please, gold's trying to hold the 50 day on the 1 hour right here. S&Ps are still up on the day. And as I said earlier, that this euro was a decent short with tight stops, is manifesting to the downside now. I think we're headed back down towards this 1160 low while S&Ps continue the short squeeze. We take out 1160, we're looking at 109, 108. Or 108 is a big test for most people. Thank you, Ricardo. Still waiting for Ashraf. Stand by for this interview. US dollar yen looks like it has another run in it. I thought we could go 22, 23 and the yen. And that's how the S&Ps could get up to 2040. So where's that S&P look? I don't have it up right now. So when I was talking about the S&P getting back above 2,000 last week, people thought I was crazy. Now, not as much so. Although, because I follow moon cycles, I've been called a lunatic. So I've been talking about 2040 in the S&Ps for recommits and shorts. It's fine if it goes there. I'm looking for it to happen, if it's going to happen by Friday, late this week, early next week. And perhaps that's where the dollar strength terminates. So those are my calls. That's my Nostra Pinkert. And from this area, I'm looking for at least equal to this, which was 300 points. So from 2050, it gives you 1750. And then if I really want to get bearish, I'd look for 1.618 of 300 points, which would be 480. So say we peak at 2060, that would take you to 1580. 1550 is 38% back of the whole bull move from 2008 to this year's highs of 2031, 2130. Give me a Y if you understand the analysis I just broke down in the S&Ps. So membership is still sending some charts out, monthly views, everything. You guys have to stop into LAR. Great way to follow traders that may be better than you. I know there are some in here that are more consistent than me, more disciplined than me. So until Ashraf gets here.
Hello.
Ashraf, how are you?
Hi, Dale. How are you? Long time no see. Long time no
Yeah,
talk.
it's great to have you here today.
Thanks for having me.
Yeah, your reputation precedes you coming here to LAR. You're very well respected in the FX arena, Ashraf, and I think it's a great time for us to have a discussion. I see Arcsoft Magic Eye visual effects, so you have some things you want to show us. I did notice a tweet that you did yesterday about US dollar yen, and
Yeah.
you were talking about a 109 target. I guess we're kindred spirits, and that scenario still looks to be on the table. Am I
Yeah.
reading it correctly?
Yeah. First of all, how's your health?
I'm assuming I'm fine.
Good to
I
hear.
fired my doctor, so life goes on, and I'm just continuing with my life until people ask me how my health is.
That's
You
not, that's the
know,
most important thing, man.
let's see, my philosophy is denial. Not in
Yeah,
trading, but when it comes to medicine. So
excellent.
I use denial, and thank you for asking, and hope to be doing this for another 10 years and maybe in 5 from an island, so I
Well,
can avoid.
as long as you have the desire and the will and the interest to do what you love to do, I think
Right.
that's a good step forward, and let destiny do with you what it wants to do.
Exactly. I'm letting God number my days instead of physicians. So,
Very good.
I appreciate you asking me how I'm doing, and
No
every
problem, no problem.
day it's my mission to build up and edify traders, and that's why having someone like you here in our community is really a great thing because
It's my honor. It's a
I
pleasure.
know you're a pro, Ashraf, and I would use like a jet airplane to describe you because you're a top gun.
It's a pleasure. It's a pleasure to be here with you guys. And whenever FX Street and you ask me to come in, it's a long relationship that I've had with FX Street and the guys and Mauricio and Francesc. And
Yeah,
since it goes back to all the way to 1999, actually. And
yeah,
so, yeah, so here we are. Am I going to have the chance to do a screen share or no?
yeah. It's up on the left-hand corner. It's a green box with an arrow that you click,
Yep.
and then it'll show different desktops, and you click that, and then start, and
All right, very
then
good,
it
very good.
should come up.
Full screen, Bloomberg Launchpad. Let's do the full screen and see where that takes us. If a full screen meaning my full screen. Yeah.
Okay, right,
Okay,
correct.
let's start screen share. Okay, you are screen sharing, so now you are seeing what you're seeing. So now,
Yeah,
do you
we have
see
your
do you see the blue
we have your
chart?
terminal up here.
Very good. So you see the dollar CAD chart.
Yeah,
Very good. Okay. All right. So, how much time do we have, Dale?
as much or as little as you want.
Okay. Very good. Well, thanks for having me, and hello everyone else who's here. About the dollar yen chart, which is very important. Basically, what I could do a few things here. So, what I could probably do is go into something that I've alluded to here. So just it's something that I wrote in June 15th of my website here.
Okay.
June 15th. I'm just going to take you there, and the chart will speak for itself. Um, where do I go here? Yeah, intraday market thoughts, and it's basically this is the free part of the website, and I just put a New Zealand dollar chart, which is very important, which we need to go back to later on
Okay.
today.
Okay. So, if your view, am I correct to assume if your view is of a potential target of 109 in U.S. dollar yen, which would happen in a risk-off environment, that
Yeah,
eventually we're going to clear out that double bottom in the S&Ps around 1830?
yeah. The problem. Yeah, I think we're gonna go 1830 and below, but I think we gotta first do 115, and we gotta retest 115 very well in dollar yen before we
Okay.
drop lower. But what's important, actually, you just asked something very important, which is the mother of all movements in the next few weeks, which is the S&P and the Dow. So I'm going to look at that. That's very important. This is what I've been telling the subscribers. The similarities and the contrasts and are uncanny with 2011. With 2000 and 2008 in the S&P 500
Wow.
and the Dow. This is very important.
It sure is.
I saw a guy on CNBC. He was a technical analyst, not Carter Worth, but somebody else. Who basically said that the S&P is going to continue to push higher because it's going to do what 2011 did. I'm going to disagree, and I'm going to show you why I disagree. But here is dollar yen. This is a chart from June 15th. June 15th. So basically, this
Right.
chart speaks for itself. Dollar yen. It's a multi-generational, opportunity here. So from 1995, This is April 1995. From April 95 to August 98, right at the cusp of the crisis, we had a 40-month cycle, 40 months. And we came back down, up and down, lower highs, lower low. Then finally we bottomed in February 2012, and a few months later, Prime Minister Abe decided to throw everything on it and hired Kuroda, bought ETFs, bought equities, pushing this, and it peaked for
they must have a very powerful Xerox machine.
Yeah, it's very powerful Xerox machine. Let's not forget, Japan went into 0.5% interest rates, not in 2003, not in 2004, not in 2001, but in 1995. That is what you call in English a 20-year anniversary. Okay, so basically, this is when they started 0.5% interest rates. Then they went into deflation. Here is what's important. Everybody is listening to you and me, Dale, and is saying, Ashraf, what are you telling me? How do I trade this? How do I trade a 40-month cycle? Well, here is what the chart is showing right now. And here is what the chart is showing. So let's go to the chart now and go to dollar yen. So we're going to start from the top to the bottom. So we're going to start with a monthly, and then we're going to go to the weekly and daily and so on.
I remember that about you. You always use your telescope before you use your microscope.
Exactly. So here is the move that we did. So that's basically from April 20. Oh, we just got the crude oil inventories, 3.07. It's a build. They rose. Okay, it's a build, so probably that's a little bit negative for oil. Well, anyway, all right, never mind. So here is the thing. This is what's important. From here to here, this is the basically 40-month. We come down, and then guess what? 40 month in here. Now, we peaked in June. We peaked in June, and now we're down. Here is the key now. Is this going to break or not? And this is like two different churches, two different synagogues, two different mosques. People are fighting with knives and guns, those who are in the camp of 125, 130, and those in the camp of 105, 110. Well, I think that probably the time has come to say that, okay, this is the time has turned. Now, I can have the fundamental reasons to say why this is going to break, but let's just say something here. You start with the top down. The top, we're looking at some. This is the momentum. This is the stochastics which I use. This is the upper panel. Is the fast one. Is the most sensitive. The less sensitive. The least sensitive. And these guys are showing deterioration that we haven't seen in a while. Now let's go to the weekly, and here's how I think it's going to play out. Okay, so this is what happened in the weekly. You had a series of a triangle that beat that broke on the upside, and so this is the weekly. We had a series of triangle that beat on the upside here, here, and now we are seeing, so the trend line continues, previous resistance, now support, it broke, you can say triangle coming in here. Now, this is respecting this, and we are, so basically the 55-week moving average is serving as a trend line. And I think that, and where you would draw your trend line, for me, I still have a short. Just to give you an idea, for I'll still have a short. My intermediate stop is around 122, but I'm targeting 117, just to show that this is a proof here. Basically, if you go to the website, you go to premium, and then you go to
I was kind of thinking that there might be, if the S&P's had enough jet fuel to get up to 2040, 2060, that they may want to clear out buy stops over that 121 level. And it looks like it would hit your wall or your trend line breakdown up around 23 or so.
Well, that's the thing. I'm hoping it does not go to 123 because, and it's very important that you mentioned that 2020 and 2040 in the S&P, because that's what everybody, whether you like it or not, whether you're a bear or a bull, whether you are correct and you think the stock market is going to go down 5%, that 2040 may have to be inevitable. 2030. I'm going to show you later on at the end of this why we're likely to show that. It's something that is uncanny with what we professionals do. It's our job to point this out. It's one of these things that are hard to find, but once you find them, they are hard to ignore.
And
Okay,
you could
so
milk them, and you could milk them for a while.
you could milk them before they milk you, because you could truly be able to predict the move,
We
but
have
you
to
can
be
still
careful
lose your
with
shirt.
milk. We have to be careful talking about milk. It might affect the kiwi.
Exactly. So here is the thing. So basically, I had a short. So in 29th of July, I had a long. I was able to get away. I was so lucky in hitting my final target of 125.20. Then in 20th of August, I issued a short 123, 123.40, 123.70, hit 121.30. Now I have a short 119.50. I have one which has not been executed. I need to see 121.10. But the current one is 119.50, 119.80. I'm pretty much breaking even. But my stop is 122.25. Now you, Dale, mentioned 123. Now let's talk about this. Now there is this moving average, which basically the 10-year yield in the United States, the 10-year yield is also highly correlated with
Right.
with the US dollar yen, and that broke below its 200 DMA. We're broken below the 200 DMA in dollar yen. Uh, I think I'm comfortable that I can leave my stop at 122, Dale. Why? Because even though we've broken in this trend line, we need to negotiate this guy here, 120. But even if we do, we will have we will have the 55 DMA and 100 DMA. I hope that it's going to respect this. Now let me tell you something, and this is very important, and I want Dale and everybody else to listen to this. Now, the reason that dollar yen is finding a hard time in going up, i.e., the reason that the yen is finding it's two reasons. One is because the dollar is falling mainly across the board because after the Fed rate hike rethink after the payrolls, so the dollar is taking it on the chin against the higher yielding or the commodity FX. This is what everybody knows. What everybody may not really know is this chart, which is here. So I'm going to take you to the 10-year yield. Now, many people the yield going up while stocks were going down. 10-year yield. This is important. People who expected just to talk about FX and are disappointed, you may want to hear this. This is very important. Okay, so the reason that the yield in the United States of America on the 10-year yield government paper is coming down and it broke below this, why is that? Because the Chinese are no longer selling US treasuries in order, because what they were doing, the Chinese, when they did the big devaluation or the devaluation, which is basically letting the Chinese yuan to go down and buying US treasuries. After that, they wanted to calm the fears of the world and say, listen, guys, we're not going to go into outright devaluation. And they started to push the yuan higher and the dollar lower. They were trying to sell the US dollar to prevent the yuan from weakening so much. All right?
Okay.
And the way to sell the dollar was they were selling treasuries. When you sell treasuries, you sell the bonds, bond prices go down, yields go up, and the yields were pushing higher here, August. But now they're coming down. And this brings us to Forex reserves figures that came out from China. They fell by only $45 billion. The previous month, they fell by 90 billion. Now they fell by only 40 billion. So they're doing less sales, less selling. This is what's important.
Yeah.
So here is the thing. As this guy, the yield coming back down and the Fed hike rethink comes down, dollar yen is probably going to remain lower. So, and this is the weekly chart. Here is, okay, Dale, I want you to take a pen and a paper and jot it down and write my forecast for the 10-year yield. Okay?
Yeah, go ahead.
And write it down and let's revisit it in a few months. I think that the 10-year yield in the United States is going to do the following. This is the monthly chart. The 10-year yield, and this is very important, it's probably going to push high. I don't know if it's going to go back to 199 in May, but I think that the medium term is going to retest 220 or 215, and then by probably March or April, we are going to be, hold your horses now, we're going to be below 137. Okay,
Wow.
we're probably going to go towards 120. Okay, so we're going to drop further and further.
Okay,
And that would,
that's a pretty deflationary outlook.
it's pretty deflationary, and I think that and that will come in, and dollar yen will likely fall back towards, we may be, you and me may be talking give and take 122, 121, 122.30, 122.40, but we're going to drop below 115, and that's important. Now, the most important set of charts, ladies and gentlemen, is the following. As I'm talking to you, let me just have a look at the market, what it's doing. Euro dollar dropped 112.30 from 112.80. Dollar yen is unchanged. What is oil doing? Trying to push 50. I think we're going to test 50.
Right.
Okay, very interesting. Dollar, okay, very good. The S&P is up 20. Very good scenario. Okay, now for those of you who like patterns, for those of you who like to go to museums, who like to see repeating patterns, I'm not talking about the Fibonacci's. I'm talking about something more meaningful than that. Here it is. Make sure you're sitting down. Make sure you're drinking your favorite drink. And here we are. And here we
Head
go.
and shoulders.
Head and shoulder. Oh yeah. No. That is, yeah. I agree with that. But that's not what I'm talking about.
Okay.
Yes, but I agree with you. Head and shoulders is correct. Head and shoulder on the Dow. Head and shoulder on the S&P. May not be the most obvious, but yes, you are absolutely right. Dale Pinkert, here you are. Not the prettiest of necks and shoulders. Some people may not like it. If I saw a woman with a shoulder like that and a neck like that, I would not talk to her. I mean, but it's okay. But I'm luckily married, but in my religion we're allowed to 3 more wives, but so it's okay. But but it doesn't matter. Anyway, so this is a big head. Who would want to be with a woman with a big head? Anyway, the big head, very, very big shoulder, thick neck.
You're starting to sound like Donald Trump a little bit here, buddy.
Yeah, it's okay. It's okay. Well, if you're a woman, you can say, I wouldn't want to go out with a guy who's got a head like that. It's okay. Equal opportunity. Okay. Now this is fine, and this qualifies. The Dow is actually even better. So, but here is what I want to show, guys. What we did. A lot of people talked about the October low. This is October low. The Ebola, the Ebola low. The concerns with QE, the end of QE, and the Fed. All of this reached a low. We went up, and then 180 degrees in 12 months.
Yeah.
12 months. Okay. It's all about this.
That Ebola low, Ashraf. I was recovering from my surgery a
You
year
were.
ago there. And you know what? I owned a bunch of mixed calls that I got out of before surgery because I didn't think I'd be able to manage them. So I'm laying there in the hospital bed watching the VIX skyrocket to, 31.
Yeah.
So I'll never forget the would've, could've, should've of that low. Go ahead.
So you were owning the calls for the VIX.
But I got out because I was going into the hospital.
And you got out, so it's very good.
The lesson is next time you go into the hospital, don't get out of your positions. Just put orders in.
Very good. Very good.
Go ahead.
Yeah. Or when you're going on a long trip. Yeah. Very important. Very important. Listen, look, guys. I hope I did not offend anyone about men and women, with head and shoulder and this. I hope nobody took it as sexist. It's if you're a woman, you can view it, or if you're a woman who like women or men who like men or whatever. But it doesn't matter. We're not going to judge. It's just a small comment here. Anyway, listen. This trend line has been tested here for a while. What's important is we're broke above the 55-week, the 100-week moving average. We've put in a low, a neckline. It's all about the purple, which is 2048, which coincides with a trend line. So that's a confluence, 3 confluence. Yeah. It's the purple, it's the trend line, and it's the neck, and it's the support here. Now, this is not what I'm talking. This is not what I want to talk about. This is just the beginning. I'm just getting warmed up, like Al Pacino said. Here is what I want to talk about. This formation, ladies and gentlemen, is seen here. Here. Bam. 2000. This is S&P 500, the peak of March 2000, weekly chart. This is the peak of 2007, October 2007, weekly chart. And this is the peak of May 2015, right here.
Yeah.
So we have a peaking 55-week moving average. And as we are peaking, as we're coming down, we came down a few months after the peak of 2000. We start coming down a few months after the peak of 2007. And we came down after a few months after the peak of 2015. Now, look how the 100-week moving average is doing. It is also peaking like it did here, like it did here.
That was a classic test in '08 on that recovery to your moving average. What is that?
Yes.
That's the 100-day?
The green is the 100-week. This is the weekly chart. All of these are weekly charts.
The purple,
The purple is the 55.
Okay, thank you.
So the second component is the trend line. Now, I'll take you to 2000. After the high, you had a failed intermediate high. You tried to go back above the 55-week, you failed. Coinciding with the intermediate, you make a trend line. You fail that. You come down. You don't go all the way to 200-week moving average. You put in a low at the neckline. The putting a low of the neckline, which is 99, 99, 2000. The low, this low here, I hope you're following the mouse.
Yeah.
The low here is the same as the low here in 2008. What happened? October 2007. This was the high. We came back down, lower highs, forming a triangle or a trend line. The trend line falls below the 55. The market breaks below 55-week, 100-week, goes all the way to 200-week, respects it, tries to break the 100-week, falls 200, then goes back. Ladies and gentlemen, where we are today is here. Where we are today is here. And like Dale rightly pointed out, he said, well, Ashraf, you think we're going to go to 2040 to flush things up? I think it's very possible. I could sit here until tomorrow morning to explain to you the fundamental means by which we're going to see this technical development. The fundamental means would be what? People are going to be comfortable. There's no way in hell or in heaven the Fed is going to raise rates in October. Market is going to be complacent. There is no rate hike in October, probably not even in December. I was actually, for the records, thinking no rate hike at all since December of last year, but that's just a small detail. It doesn't matter what I think. Earnings are going to give and take. They're going to play around earnings. There is visibility. You may disappoint on sale. You may improve on earnings. It is easier to beat on earnings than on sales because it's harder to control sales. It's easier to play with earnings. It's easier to play with costs and so on and so forth, blah, blah, blah. Then if you screw up on both, you just say, well, I'll give you better visibility. But this is not an equity webinar. We can talk about this some other day. But this is a great opportunity. The threats are less. China is still in G20. They're not going to depreciate their currency yet. Where are they going to come back from? Lima, Peru, and then they're going to start to trigger with the depreciation. Right now, they're going to leave the currency a little bit higher. A lot of reasons for the S&P to go back here. Ladies and gentlemen, what this is happening, this formation, what you did, you put in a neckline here, and you put in a neckline here, like you did here, like you did here. The market is time. Okay, people who have a raw deal from the market, when they lose money, they say, the market is out there to screw you.
Yeah.
And if you're a bear,
I burned when the truth is I was wrong.
Well, exactly. And the problem is that even if you anticipated this to happen, you can still lose your shirt thanks to the courtesy of leverage. Some people go crazy on leverage, whether they're using a spread betting 20-point or 50-point pound per point, or they're using CFDs, they go all on this crazy contract, or they just go with leverage. What is important, guys, is that this is the market. Now, if you're a bull, you're going to say, well, we are going to break higher. Now, I'm going to take you to 2011. If you're a bull and you say, no, we're going to go above 2050 and we're going to go to the high, you may want to get the services and the help of 2011. And 2011 is this. And here is what it is. 2011, we had a similar formation, and I'm going to disprove this notion. What we had here, and again, if you wanted to hear a lot about Forex, and then you see me hear about this is important because this really is going to determine a lot of the correlative relationship. So
yeah, it's the linchpin.
Yeah, so what we had here, you had the famous 2011 high, then you have the decline based on Italy falling out of bed, Greece, and the US being warned and being downgraded by S&P. You come down here, you fall below the 55 week, you fall right below the 100 week, and then you're immediately at the 200 moving average. And then you get a neckline. You see the neckline here? You see the neckline? You support it, you're respected, and bang, you're up. Let me tell you something, ladies and gentlemen. Why this is different. The fact that this is different than this, and this is similar to this and this and this, why is that?
Because we didn't get to the yellow moving average, which we did on the previous examples.
Well,
could that be?
Okay, that's a very good answer. It's not necessarily the correct one because, but wait, you actually, look, Dale, it's tough because here in 2008 you did get to the 200 week. You did get to it twice. Then you go back up. You break 100 week. You fail 200. You fail the 55 and you come down. Right. In 2008 and 2000. You did not go all the way to 200 week. So it's different. But here is what stands out from 2011, Dale, is this. Guess what this is? This is not a record high. All right? 2011 was not a high. The market was at a lower, the high was in 2007. Right. We did not take out a new high. When we had the QE1 and QE2, and then when you had the US election, and then when you came back up, you did not go to a new high. Therefore, it was easy for the market to drop back to the 55 week and the 100 week, and then to go back up, okay? This is what's important. Number two, 2011 was saved, was stabilized by emerging markets doing very well. We don't have this now. China was doing very well in 2010 and 11. Brazil was doing very well. India was doing very well. Russia was doing very well. Oil was going up. Gold was going up. These emerging markets are breaking one by one thanks to falling commodities, probably except India. Okay?
Another great point.
The emerging market put is not here. The Greenspan put, the Bernanke put, the emerging market put is no longer here.
And back in 2011, there was another QE program that was launched too, right?
Very good. Excellent that you mentioned, because this is what I was exactly going to say. When you go to a restaurant and you have your hors d'oeuvre or entree, and when you have your hors d'oeuvre in France, it's called the entree. Where in the U.S. it's the main dish. Then you have the main dish. When you're about to go to dessert, you're not totally hungry, but when you know that it's dessert, you're still hungry, because even though you're full, there's part in your stomach that is ready to savor the sweet. Okay? What happened in 2011, we had QE2. Then before we had QE3, they called it Operation Twist. Operation Twist could have very much been called QE3, but they did not. What they called QE3 was later what happened in 2012. The market was still not satiated with QEs. Now the market is full with QE. It's marginal diminishing rate of returns. If you gave them QE4, they would not like it. But like you rightly said, it was still in a stage where the market was hungry and it was easily ready to be impressed with more QE and to go up.
Yeah, and they could have called that QE in 2011 Chubby Checker, because he invented the twist.
Absolutely. And Operation Twist was done in the 1950s. They tried it again in 2003 or 4 or whatever. Then they brought it back in 2000 and I believe 11 or 12.
They did Twist in the 50s?
Yeah, Operation Twist. Exactly.
Huh. I
They
didn't
did.
know that. Huh.
Yeah. Not that I was born by then, but yeah. So here's the thing. So at the end of the day, I hope I have given enough reason to believe that. And again, let's not forget this. Let's take a step back and say what Dale said, which is, guess what? I mentioned 1, 2, 3 confluence. I mentioned the trend line confluence, number 1, the 55-week moving average confluence, 2, and yes, the trend line that you mentioned, which is the head and shoulder. Shoulder, neckline is here, shoulder is here. All right? So 2019, 2020, I know we're talking about 0.71% differential, but it is worth it for you to find out. So for me, I'll tell you how I was trading this. I still have some shorts in the DAX. I still have some shorts in the S&P. They are losing money. But since Friday, I was going on to very aggressive shorts, chasing 5 to 7 points, on the spread bet, chasing 10, 20, 30 bucks per pound, a pound per point, sometimes even 50, trying to go very quickly. You have to have enough money for you to be able to play this, but it is worth it, because don't let the market prove you wrong. Don't let the market irrationalization take you out of the market, even though you're right.
Where are we wrong on this scenario? Closes over new highs?
I'm sorry?
Where are we wrong on this scenario? New highs over 2130?
Yeah, well, that's a good question. I think that yeah, some people would say 2120, 2130. I would probably say, look, if this is a weekly chart, if we have a weekly close above 2080 or 2070,
okay,
I think that would be good. I don't think I would take it all the way to 21. I think if we close above 2180, I think it's important. However, you have to be careful, because in today's day and age, in today's high frequency driven, algo driven market, the market is going to want to smack you all the way to 2080 before it asks questions.
Right.
And that's what you really have to be careful.
Okay. Appreciate it. Great presentation, Ashraf.
Yeah, I'm glad I helped, guys. This is very important. We are living in, look, this is a time that a lot of the bulls and the bears have been waiting for a very long time. And these are very rare times. This is the time I've been looking for this recurring pattern since November of last year. I thought I got it. Well, I did not get it. Here is one parting shot. One parting shot. I expect the death cross in the S&P, the death cross in the S&P in the weekly 55 below 100 to happen in January of next year.
Wow. Okay.
So the death cross, we had it here. Yeah. This is in 2008. Mm-hmm. This is in 2001. We are going to see the 55-week moving average falling below the 100 moving average, and the death cross falling below around January. And that will probably...
Where do you think the S&Ps will be there when that cross happens?
Very, very good question. Listen, this is very interesting, because these things are lagging. By the time we get to the death cross of the weekly, I think the S&P would have pushed a little bit higher. I think by the time we would have gotten to the death cross, I think the S&P would have probably tested 2030, 2040, and then after which would probably be around, I would say, 1900 or 1910. It's tough to know, but I think we will be lower than now.
What's your ultimate downside objective for this formation and wave, since you're using the 2000 and 2007 analog? Those were 40–50% hits in the market. What are you looking for?
Well, the temptation is to say things such as 1700, 1500. I'm going to try to play a little bit conservative, and I'll go here to the monthly, and I'll say that by that time we are going to be below this trend line, which, as a matter of fact, the Dow broke it. I would probably say we're going to be looking at probably around here, this level, which is 1765.
Okay.
Before we go, this is what's important. This is the Dow, and the Dow has just broken the 2009 multi-generation low trend line.
Right.
And this is the head and shoulder, but the Dow is looking at this 55-month moving average coinciding with this low. Probably 15,000 is where it's next. So basically, you know where to follow me. You follow me on Laidi on Twitter. These are basically here the recommendation and so on and so forth. I have a video which is a new thing for us, for the premium guys. Basically, I've done a video for 20-30 minutes where I talk about the current premium trades. I even have a new one in Arabic. You go into here and then you click on to the video, and it tells us all of these levels, which I don't share with the non-premium subscribers.
Ashraf,
Okay, Dale, thanks very much for having me.
Thank you so much. I hope pips rain down on you from here till January.
I hope they rain on you, on me. I hope you good health, better health. Keep on doing what you like to do, what you want to do. And I hope everybody else, be very careful. Always test yourself. Ask yourself. Retest yourself. And doubt yourself before you attack. And always ask questions. All right, guys, this is very important times. The next few months, the market may be against you if you're short for a few weeks. But keep your pocket keep your pocket deep for the right reasons, okay? And keep asking questions, and we'll see you next time.
Good hunting, my trading warrior brother Ashraf Laidi. Add a Laidi, follow Ashraf. Don't fade him.
Good luck, guys. Take care.
All right,
Thank you.
Ashraf. You're very welcome. Okay. Everyone all right? Everyone enjoy Ashraf? You guys enjoy him? So the euro held the 112 area. Pound still strong. Yen still looks heavy. Everyone doing okay? Here's my wrap up. Thank you. Everyone thank Mauricio for getting Ashraf to come and join us today. Okay. Nice interview by you as well, veteran. Mauricio, do you want to wrap up or do you have enough content? You have enough content? Your call. Okay. So here's the wrap, guys. I still believe if there is this push to 2040, 2050 S&Ps that it's going to be dollar positive. So as long as euro stays under this 1280 area, I still think there's a chance for it to break down. It's acting weaker than the pound, although the pound might is still now just beginning to diverge in the pound. Perhaps we get one more push up in the end, like I've been saying, if S&Ps being the linchpin, push up to those levels. And euro pound looks like a pretty good outright short for me. I think that we have a shot in euro pound to pull back on this last phase of dollar strength down towards the 70.5 level. Pretty negative action today. I think we're going to take out the 72 low and head towards 70.50. Those are my calls. The next one's yours. I want to thank everyone for their contributions today, all the chart shares. And if Lara is helping you out, support our sponsor, FX Pro, and establish an account with them. Remember, don't just count your pips, count your blessings. And I'll see everyone tomorrow. And spread the word. And don't forget to tune in Yohei Elam for his London report, and then Tip TV prior to Lar going live. And they will be covering the Bank of England tomorrow. Okay, everyone. Thank you, veteran. See everyone tomorrow.